Somebody has asked a very interesting question. He is having two books. One is having 127 pages, other one is having 315 pages. The book with 315 pages is having white and some light maroon color, so which is to be used for exam. The simple and best answer would be, you see whichever is latest published. I think one with 315 pages is published recently, so you have to utilize that book for exam. Okay, it is as per present syllabus, so that is to be used. If you want further help, then you can refer to old book of 127 pages, but you are advised to refer mainly to page 350 pages book. Any other general question pertaining to exam, etc., you may refer to examination handbook, which is available online on III's website. Now, general average and particular average. Mr. Chobal explained about general average and particular average. General average is common loss, and it is of two types. General average, sacrifice, when somebody's cargo is sacrificed for benefit of all, others people have to pay contribution for that person's payment to that person. That is called general average contribution. So general average sacrifice, general average contribution. So these are two matters. The word average in marine means not condition of average, because in marine there is nothing like condition of average like fire policy or property insurance. Average means loss. So general average means common loss, everybody's loss. Everybody who has received benefit has to pay for that. If insurance is taken, the insurance company will pay that amount. If insurance is not there, person has to pay from own pocket. PA is partial loss. Any loss which is less than 100% is partial loss. So average once again refers to loss. Now somebody has asked a question about collision between two ships, टक्कर between two ships. This is called collision liability. So logically speaking, ship owners are liable for collision liability, but because of market practice and contractual terms, these liabilities major part is transferred to the cargo owners also, and cargo owners policy will cover liability arising because of collision between two vessels. So suppose there is collision between vessel A and B. A's vessel will pay liabilities or losses on B. B vessel has to pay liabilities and losses on A. So that is in proportion as decided by the court. So that is legal procedure, slightly technical. It is not very important for examination purpose. So you should know that cargo policy will pay for liabilities also, and when insurance is taken, insurance company will pay for that portion. But liability is to be decided by court, and as per court's verdict, that is to be distributed as per method given in the judgment. Now this is very interesting question. Under 1938 Insurance Act, Controller of Insurance was established as controller in Indian insurance sector, both for life and non-life. It was a single man authority and worked for many years. But in practice, if you saw, its main role was as a licensing authority, issuing license to agents and surveyors. That time brokers were not there. Insurance companies licensing was not required because only public sector insurance companies were there after nationalization of sector. So more or less there was not much work for controller of insurance because companies were operative in public sector and government of India was controlling this working of these companies through General Insurance Corporation of India holding company. In case of LIC, it was controlling directly. Now when it was decided to open up the sector in 1999 and sector was opened in 2000, there was need of having full-fledged body to have proper control over working of public sector as well as private companies, because not possible for government to look after day-to-day affairs of working of insurance company. So IRDA was formed, Insurance Regulatory and Development Authority, and the controller of insurance post was made more or less dormant. In statute book it is still there, but whatever work was being done by controller of insurance is now taken over by IRDA. So why controller of insurance is necessary? It is still necessary because when due to certain reasons, if IRDA becomes inoperative, then government will appoint controller of insurance for that period till IRDA becomes once again operative. So that's why both are simultaneously in statute books. For all practical purposes, IRDA is the main authority regulating Indian insurance industry. IRDA came from say 31st December 1999 when IRDA Act was passed, but actually started working in 2000. Prior to that, it took over functions of controller of insurance, but that time the name was IRA, Indian Insurance Regulatory Authority, because that time only public sector insurance companies were there and development function was not given to this authority. So IRDA worked as interim body, taking over functions of controller of insurance for some time, and subsequently after formation of IRDA Act, it started working from April 2000. Lock-in periods for unit-linked insurance plan is 5 years, and during this lock-in period, no money can be refunded or paid back to policyholder. Even if policyholder has gone for cancellation, surrender, etc., money can be paid only after completion of lock-in period. Capital requirements for insurance companies working in rural area. This is a very interesting question. In fact, there is no specialized insurance company working for only rural area. All insurance companies, whether life insurance or non-life, are required to work in rural areas. They should have minimum numbers of policies or minimum percentage of insurance premium as decided by IRDA from time to time, coming from rural sector. So all companies have to work in rural area. There is no specialized insurance company working in rural area. So any company should have capital of 100 crore. It is not area specific. It is for direct insurance company. 100 crore capital is required. All insurance company can work in anywhere in India, but as I told you, they have to do rural insurance business. There is no insurance company which works only in rural area. Difference between broker and agent. This is also an important question. As far as capital requirement is there, agent doesn't require any capital. Anybody can start agency business if he or she is 12th standard pass or in areas less than 5,000 population, 10th standard pass, undergone 50 hours training, passed agent's exam. He can work as agent. As far as broker is concerned, there is requirement of 50 lakhs amount as paid up capital. Then minimum qualification is graduation. He has to undergo 100 hours training and appear and pass the exam. So capital requirement is there for broker. For agent, there is no capital requirement. For broker, there can be reinsurance broker also. So for that 200 lakhs, that is 2 crore capital is required. And for composite broker, 2 crore 50 lakhs capital is required. Similarly, agent can also be composite agent working for life and non-life companies, but there is no capital requirement. Broker can work for any number of companies if they are having direct broker's license. If they are having only general insurance license or only life insurance license, then they can work only with all types of general insurance companies or all types of life insurance companies. So there is no bar about numbers. But when license is direct broker, broker can work with all general insurance company or life insurance companies. So 26 general insurance companies plus 25 life insurance companies, every direct broker can work with. But for agent, he can work for only one life insurance company, or if he is having composite license, then one non-life insurance companies. In addition, there is no separate license is required for working with medical insurance company, but maximum one medical insurance company he can work for. So that is the restriction. Somebody has asked about the address of United India Insurance Company. Their head office is in Chennai. Address you can get from their website. What is marine insurance? Marine insurance is defined under Insurance Act 1938 and Marine Insurance Act 1963. It deals with insurance of goods in transit by various modes of transport like rail, road, sea, air, post parcel, courier. Then it also deals with ships which are plying on water, ships during construction, ships during breakage, insurance of freight by ship owner, insurance of liabilities arising on water, and similar matters. So marine insurance deals with insurance of cargo, insurance of freight, and insurance of ships. But ships plying only on water. It doesn't deal with insurance of trucks or railway wagon, but as far as goods are concerned, goods transported by trucks and railway wagon and aircraft are also subject matter of marine insurance. It is historical term also. So olden times, water was the only recognized mode of transport. So whatever was being transported was by water only. So the term marine insurance came into existence. So from that time, it is still called marine insurance, whether transported by rail, road, sea, air, post parcel or courier. Okay. But more important is definitions under Marine Insurance Act 1963 and Insurance Act 1938. Next question is about ombudsman's working that we saw yesterday. I will repeat main points. Ombuds can be approached only for personal and business, amount involving to 20 lakhs, matters pertaining to claims, premiums, and documentation. But before approaching ombudsman, it is mandatory to approach insurance company's grievance cell. And if within 1 month either no action is taken or negative action is taken by insurance company's grievance cell, then person can approach ombudsman. Time limit is 1 year from the occurrence of the matter, occurrence of the cause of loss. But in deserving cases, slight delay can be condoned by ombudsman on application. The procedure is application by the party to ombudsman, under whose jurisdiction the matter falls. There are 11 ombudsmen throughout India. And after receiving application, ombudsman will call for papers. He will study the paper, and on particular day he will call both the parties for hearing. After listening to the parties, he will give his award, or what is also called suggestion, within 3 months, which is binding on insurance company, but not binding on client till client accepts the award given by ombudsman. And time limit for acceptance is 15 days. Within 15 days, if client accepts, then insurance company has to act. The client can reject also and go to other alternative forums. If appointed by both the parties to dispute, ombuds can work as mediator. Now next question is about link between sum assured and surrender value and ULIP policy. Surrender value policy is linked to premium paid, and generally it is 30% of last 3 years premium paid or total premium paid. Date of establishment of general insurance in India, it is very, very old insurance, so nobody knows exact year or date. There is mention of insurance or other marine insurance in Indian classic Manusmriti. So we can say that 3000 years before, marine insurance was there in India. So marine insurance is general insurance. So you can say it is around 3000 years old. But in present form or scientific manner, it came to India in later part of 19th century and earlier part of 20th century. Unit-linked insurance plan is insurance plus saving plus tax benefits. Premiums is for risk and also for savings. Saving premium is subject to market value of investments in which the fund is invested on behalf of the policyholder as per policyholder's choice. And as far as risk is concerned, it is generally 125% of the premium paid. As per IRDA guidelines, guaranteed return is required of 4.5% minimum. Free look-in period is mainly for life insurance policies. This is the period during which the policyholder has to study the policy and decide whether it is as per his requirement or no, or whether it is suitable for his needs or no. If he feels that it is not useful to him, he can apply for cancellation and ask for the refund. This period of free look is generally 15 days. Within 15 days, he has to apply for cancellation, and while cancelling, some minimum premium will be deducted and some expenses portion has to be borne by the policyholder. So this is generally for long-term policies like life insurance policy. So for other policies like personal accident, etc., this system is not yet introduced in India. Malhotra Committee was experts committee appointed by Government of India in 1993. It is called Malhotra Committee because it was chaired by Mr. R.N. Malhotra, who was ex-governor of Reserve Bank of India. It was a committee of around 20 experts from various finance fields, trade unions, insurance companies representative, etc. They conducted so many meetings and then submitted their report in 1994. And main recommendation was to open up the sector to private players, and the private players should be, as per their recommendation, Indian companies, and as per their recommendation, foreign holding should be maximum of 26%. So they recommended that foreign insurance companies should not be allowed to work directly, independently. They can work as partner with Indian insurers or Indian companies by having maximum 26% share. They had recommended that IRDAs to be constituted and brokers should be introduced in Indian market. So all these recommendations have been approved by Government of India. IRDA was constituted in 1999 and started working from April 2000. Sector is now opened up. Licenses are being given to Indian insurance companies, and wherever there is foreign holding, maximum foreign holding allowed is 26%. Now, situation of 107 companies. The question is how many companies were there? At the time of merger, there were 107 general insurance companies. Why only general insurance companies? Because life insurance sector had nationalized in 1956. So as on 1972, frankly speaking, there were 108 entities doing general insurance business, 107 general insurance companies, and LIC of India. LIC of India was also doing general insurance business at that time. But on nationalization of general insurance sector in 72, LIC was not taken over. They had to stop working in general insurance. So remaining 107 insurance companies were taken over. They were formed into 4 public sector insurance companies. So at the time of nationalization of life insurance, 245 companies were operative in India. Chairman of IRDA, Mr. T.S. Vijayan is present chairman of IRDA. Part-time members of IRDA, there is one question about that. IRDA should have 4 part-time members. They are to be appointed by central government from the persons of ability, integrity and good standing in insurance market, who have knowledge and experience in life insurance, general insurance, actuarial science, finance, economy, law, accounting, administration or any other discipline which would, in opinion of central government, be useful to IRDA. So 4 persons can be appointed by IRDA as part-time members. Why part-time? Because they are not working full-time. There is no other logic. One question is about important regulations for life insurance sector. So these are some of the specific regulations. IRDA Life Insurance Regulations 2000, IRDA Discontinuation of Treatment of Linked Policies Regulation 2010, Issuance of Capital by Life Insurance Companies 2011, Standard Proposal Forms for Life Insurance Regulation 2013, IRDA Linked Product Regulations 2013, IRDA Reinsurance Life Regulations 2013, IRDA Amalgamation and Transfer of Life Insurance Companies 2013. These are specific regulations pertaining to life insurance sector. There are many other regulations which are applicable to both life as well as non-life. RTI Act we saw, Right to Information Act. Under this, public authorities have to give information to citizens to promote transparency and accountability. It should have, every public sector insurance company should have Chief Information Officer to deal with request for information. Certain classified information may not be given, and IRDA and other public sector companies to provide the information. IRDA's website gives maximum information, but whatever specific information is required, for that application can be made to IRDA. Bill of lading. Bill of lading is receipt given for goods received by shipping company for transportation by sea. Bill of lading. Earlier the name was bill of landing. Now, because of frequent use or market practice, now it has become bill of lading. It is now legal term, so we will be using bill of lading or BL. It is receipt for good received by shipping company for transportation by sea. So it is like receipt issued by shipping company when goods are handed over to them for transportation of goods. But this receipt is not only receipt. It is very important document. It is negotiable. It can be transferred from one person to another person. And along with transfer of receipt, title to the goods are also transferred to the holder of the receipt. So, in international trade, goods are sold or bought not by actual delivery of the goods, but by transfer of documents, which includes bill of lading. Bill of lading is titled to the goods. Whoever is having bill of lading can approach shipping company and demand delivery of the goods. So, holder of bill of lading can take delivery from shipping company. This is very important. In India, bill of lading is governed by Bill of Lading Act. Validity of insurance company's license. Insurance company license is valid only for 1 year, up to 31st December. And before expiry of 31st December of current year, renewal application is to be made to IRDA with requisite supporting documents. 50% premium limits for corporate and broker. The question is, it is applicable on what? It is applicable to total premium procured from single client or group under same management. So whatever is current year's premium, 50% or whatever percentage is prescribed should be maximum of that. Suppose current year's premium for one agent is 1 crore rupees. So out of that, maximum 50 lakhs should be from particular client or group of client under same management. If 50% limit is exceeded, then he should stop, or if insurance company is aware about that, they may stop giving him commission on the remaining business, or nothing, no action is taken by agent to control this limit, and he books more premium from the same group or from same person. Then at the time of renewal of license, there may be problem from IRDA as far as his renewal is concerned. So higher than 50% is viewed seriously by IRDA and can hamper renewal of licenses. So 50% limit on current year's premium. Current year means financial year from April to March, 1st April to 31st March. Agents working, number of companies. Now as we saw that agent can work for one life company or one non-life company, whichever license he is having. If he is having composite license, then he can work for one life company plus one non-life company. So 2 companies at a given time. Now for medical insurance companies which are specifically or only dealing in medical insurance in India, there is no specific license or separate license. So either life insurance agent or non-life agent or composite agent can work for one more additional medical insurance company. So composite agent can work for 3 companies maximum at any given time. So to become agent, we have seen that he has to have minimum qualification, undergo practical training and pass the exam. More than one medical insurance company, it is not allowed. If it is done, it is irregular, not allowed under IRDA regulations. Executive Committee of General Insurance Council. It is constituted by 2 officers nominated by IRDA, the chairman and the member, 8 representative members of AIA, 1 officer not connected with insurance, and 5 persons connected with general insurance. What is the scope of surveyor's work? As the name suggests, his main work is to conduct surveys. And under Insurance Act 1938, wherever any loss is 20,000 or more, a licensed surveyor is to be appointed. So wherever loss is 20,000 or more, IRDA approved surveyors, IRDA licensed surveyors should do the surveying work. So conducting survey is the main activity. He has to work on claims. He can work also investigator, either along with survey or independently. Another important aspect of survey's area is loss minimization. He has to recommend loss minimizing methods like segregation, change of process, change of storage methods, etc. to the client, and he can also communicate his opinion to insurance company so that the insurance company can take up matter with his client. Then at the time of preparation of his report, his base will be insurance policies. So he has to go through insurance policies and comment on whether they have been properly drafted, whatever are ambiguity, some condition is not put or additional conditions are put. He can advise insurance company on proper drafting of policies so they can be immediately corrected by way of endorsements, so that in future problems are avoided connected with the interpretation, etc. Then very important function of surveyor is to reply to the client's query and insurance company's query. If client is having any query as to the claim, then he has to reply. Insurance company is having any query on report or calculation of claim, etc., he he has to reply within time limits set up by IRDA under Protection of Policyholders Regulations. Now, all surveyors may not be expert in all the fields, like chartered accountant may not be expert engineer, or engineer may not be knowing accounting. So many times, expert is also required to work along with main surveyor. Suppose chartered accountant is working on some complicated machinery claim. So he can take help of a mechanical engineer to help in on technical aspects. Chartered accountant is employed by insurance company because major part of the claim is stocks also, and lot of accounting is to be checked. So chartered accountant is required. But suppose major portion of claim is on machinery and engineer is appointed. So he will require help of chartered accountant. So he can employ chartered accountant as an expert to work along with him. The fees can be paid by insurance company. So he can take expert's opinion. Salvage is the very important aspect in insurance. It reduces the loss. So preservation of salvage, disposal of salvage are important aspect. In that, surveyors can guide the client how to dispose of the salvage, how to receive maximum amount, or many times surveyor can also take over the disposing of salvage either independently or in consultation with insurance company. So that is the scope of surveyor's work. AML, anti-money laundering, is AML. What is money laundering? We saw that it is conversion of black money into white money, conversion of non-accounted money into accounted money by unscrupulous methods. So that is AML, and to curb this, Anti-Money Laundering Act has been introduced by Indian Parliament. So that is applicable to insurance business also. Damage to ship and cargo, Mr. Chawal has replied. Hull policy will pay damage to the ship and cargo policy will pay damage to the cargo. Hull means body of any particular ship. That's why it is called hull. Now airship is aircraft. So aircraft hull is also there. So we say marine hull or aviation hull. But as far as water-bound vessel is concerned, it is subject matter of marine insurance that we saw earlier. How NAV is calculated in ULIP policies? NAV is net asset value. The calculation is total amount of fund is to be taken, what is the amount of fund and what are number of outstanding units. So amount of fund upon number of outstanding units, it will give NAV on particular date. Suppose fund is 12 crore and outstanding units are 1 crore, 12 crore divided by 1 crore. So NAV on particular date is rupees 12 per unit. Up to what period IRDA members hold office? Generally 5 years, but every member is subject to reappointment by concerned authority. For chairman, the age limitation is 65 years, and for other members, age limitation is 62 years. Mr. Chawal also talked about incurred but not reported claims. When event has occurred, but the claim is not reported to insurance company, so on the date of closing, on some ad hoc basis, insurance company provides for this type of claims. Now take a very good example. It is still live. In September 2012, one vessel, Amsterdam Bridge, started from Bombay, carrying around 42 containers of different type of cargo. From Bombay, next destination was Colombo. Before reaching Colombo, there was some fire on board the ship outside Bombay. It was extinguished with the help of Coast Guard. But to go further, vessel was to be repaired. And repairing was not possible in Bombay, JNPT, or other nearby ports because sufficient facilities were not there. So vessel was shifted to Shanghai after many months. Still, vessel is on sea, it had not reached Colombo. As per latest information, it is at Singapore awaiting the berth. Then it will go further. Now September 2012 to November 2013. One balance sheet has been closed by insurance companies in March 2013. At that time, everybody knew that there was fire on board Amsterdam ship, but nobody knows whose cargo is damaged due to fire. There may not be direct damage due to fire, but damage due to heat also may be there. So, which cargo is damaged, which containers are damaged, nobody knows. So, every company who has insured cargo on that vessel had provided under IBNR provision on some ad hoc basis. That is incurred but not reported. Reversionary bonus, there are two methods. In simple reversionary method, the bonus declared is added to the basic sum insured. If sum insured is 50,000, bonus declared is say 5,000, sum insured becomes 55,000. In compounded reversionary bonus method, the bonus is calculated not on basic sum insured but on previous year's sum insured, where previous year's bonus is also added. Okay. So all bonuses up to previous years are added on that sum insured, and on that current year's bonus is added. Suppose that sum insured is 80,000, current year's bonus will be added to that. 85,000 will be total. Headquarter of Ombudsman. There is no headquarter for Ombudsman. They are at different places in India, and there is no controlling authority for Ombudsman. So there is nothing like headquarter for any Ombudsman. From wherever place they are operating, it is their headquarter. Participating and non-participating. This is also replied by Mr. Chaubal. Participating policy is in life insurance, where it is eligible for payment of dividend out of the profit made by insurance company, and non-participating one is where no dividend is paid out of any profit. The client has to choose whether he wants participating policy or non-participating, and premium is depending upon the choice made. Ombudsman procedure, somebody has asked. It is application within 1 year of the cause of the loss. Calling for papers by Ombudsman. Both parties are heard, and after hearing, award is given within 3 months. If client is satisfied, he will accept the award. If he is not satisfied, he will reject. After rejection, he can go to consumer forum or civil court, city civil courts or applicable courts. As we saw that Ombudsman system is applicable only for personal lines, not for others like commercial lines, etc. Cancellation of life insurance policy after 2 years. This can be done only for in a case of any statement in proposal or supporting documents. Generally, they cannot be challenged after 2 years of policy coming into force, but that can be challenged if it is non-disclosure pertaining to material fact, fraudulently made and intentionally made. So, owners of proof is an insurance company. They have to prove that particular fact was fraudulently and intentionally made, and that was material fact. So, cancellation possible after 2 years for non-disclosure of material fact which are fraudulently and intentionally made, and that is to be proved by insurance company. The question is, what will happen if nominee is sick? Nominee has not to do anything. He has to just give the discharge to the insurance company of claim papers. He has to sign that he has received money, and insurance company will make payment to the nominee. If he is sick, then he can give discharge, collect money, and remaining portion of distribution of that income or that money received, he can give to any other person like his son. Their insurance company is not concerned. Other laws are not involved. What is to be done subsequently? Question is how much foreign holding is allowed in broking company. Like insurance company, broking company also, foreign holding up to 26% of paid up capital is allowed. Higher amount is not allowed. Minimum paid up capital for reinsurance broker is 200 lakhs or 2 crore. If composite broker dealing with direct insurance and reinsurance also, then 2 crore 50 lakhs premium is required. Micro insurance products are crop insurance, livestock and cattle insurance, theft cover, health insurance, term life policies, policies covering natural disaster, personal accident insurance, etc. These are micro insurance products. Question is asked how money laundering is possible in small amounts. An example is given that if small amounts are deposited frequently and then big amount is withdrawn, whether it is money laundering. Reply is yes. Person, if he is having lot of cash which is unaccounted, every day or every interval of few days, he will deposit some amount into bank. The bank will question you if you are depositing 50,000 or more. At least they will ask for PAN card number or may demand copy of PAN card. So instead of depositing 50,000, one can deposit 49,000, 48,000 or less. Then banker will not demand anything. Then another requirement for banker is that if any year any transaction is 10 lakh or more, it is to be reported to concerned authority appointed for the purpose. So person will not deal with 10 lakhs or more. He will deal with money which is 9 lakhs or less than 10 lakhs. So it's not reported to authority. Periodically has deposited 50,000. It doesn't come into the notice of insurance company. So he has accumulated money, converted cash into bank account, and when he withdraws from bank account, it becomes white money. So this is money laundering. Maintenance of solvency margin is very, very important for any insurance company, whether working in life or general. Solvency margin is comparison between assets and liabilities of insurance companies. We can say that any insurance company is solvent when their assets are more than liabilities. If any given time, if insurance company wants to close the operations by disposing of the assets, it should be able to pay for all outstanding liabilities shown in the account books. So as per IRDAI regulations, 1.5 is to be maintained as solvency margin. That means assets should be 50% more than liabilities as on any given day. If solvency margin goes below that, then IRDAI will give warning to that insurance company and if tell that to take corrective steps to increase the assets or reduce the liabilities, and if it is not done, then can suspend the license or can cancel the license. It is mandatory also for every insurance company to declare along with their quarterly accounts what is solvency margin, and wherever it is required, it should be approved by auditors and actuarial certification. Rider is mainly for life insurance policies. Mr. Chaubal has replied this. I will also reply with additional points. This is what is called add-on covers under non-life section. So add-on covers, rider, both are identical, and when insurance was restricted to only public sector companies, say prior to 1999, we are using another term, extraneous risks. So all are identical. So whether you call add-on covers, rider, or external risk, or in fire we were using term special perils. All these are same thing. So additional cover which is not given in the original policy, or sometimes it is by way of exclusion. For example, under fire policy, earthquake is excluded. Person wants to take earthquake cover. So he has to take earthquake add-on. You can say rider, earthquake rider. It is one and the same thing. Similarly, under marine insurance policy, a riot strike is not covered. One wants to take riot and strike. Yes, you can take riot and strike extension called SRCC or strikes clause. Under life policy, cover is only for natural death. Accidental death is covered but not for additional amount. So if one wants extra amount for accidental death or accidental disability, he has to take accidental rider. So all these are different forms of add-on covers. As per IRDAI regulations, premium on riders should not exceed 30% of original premium. Similarly, critical illness rider can be given also under life insurance policy. In general insurance, critical illness cover is given separately. As per IRDAI regulation, the premium should not exceed 30% of basic premium. So these were some of the questions which were asked by participants through email. So I hope that whatever was pertinent to IC 14, I have replied. Still any questions remains, please send to III. We will try to reply as early as possible. But please ask questions relating to chapters in books only. General questions you may refer to handbook of III, or if you have another specific question, you may direct to III, raising it to particular department. Or if you are having some problem about admit card, etc., what is to be done, all that information is given in examination handbook. Still, if you want some further information, you can send general email to them. We will be glad to reply. Thank you. All the best for our exam. See you some other time.